It's hard to believe we're already in the month of October. What do we see happening in the Omaha real estate market as the weather begins to cool? As inventory continues to increase, are we starting to see home prices finally start to come down? Last month, the Federal Reserve dropped the Fed funds rate 50 basis points. What has that done to mortgage interest rates? All of these questions and more will be answered in today's video, and we're going to get started right now. Before we talk about inventory, let's talk about seasonality. The Omaha real estate market experiences a thing called seasonality. Now, what is seasonality? Just like the weather, the Omaha real estate market changes throughout the year. If we look at the number of closed sales over the past 5 years, we see a pattern. The number of homes sold peak in the summer months. As we go into fall, the numbers of sales decrease. In wintertime, the sales bottom out. And in the spring, sales begin to ramp up. This is a normal pattern. A couple of key points. Number one, sales occur all year long. Two, sometimes there's a tendency for buyers to pull back in the fall. If you're a buyer, that could be a window of opportunity. And a third thing to keep in mind is that if you're buying new construction, fall is an excellent time to build a home because sometimes builders will have a tendency to increase prices after the new year. If you lock in your price in the fall, your new home could be done by next summer. When we talk about seasonality, the same thing happens with home prices. As we move into fall, the median sale price tends to drop. It bottoms out in the winter, increases in the spring, and peaks during the summer months. Why is this the case? Prices tend to peak in the summer months because the largest homes tend to close in the summer months because the largest homes are purchased by families with kids. Families want to move during the summer, and that's why you see home prices tend to peak in the summer months. Again, homes are sold all year long. If someone's selling in the winter, they could be motivated, and that could be a possible opportunity if you're a buyer. Not as many buyers are out there, so if there are less showings, there's another opportunity if you're a buyer. Opportunity is always out there. The question many people have is now a good time to buy a home? The best time to buy a home is when you are ready. Buy something you can afford and plan to be in it for at least 5 years. The problem most people have is affordability. Most homes are simply out of reach for the average person. In today's world, it takes 2 incomes to purchase a new home. Not everyone is from the Omaha area. Douglas County is the home of the city of Omaha and the surrounding communities of Bennington, Valley, Ralston, and Waterloo. Sarpy County is just south of Douglas County, is the home to the city of Bellevue, Papillion, Vista, Springfield, and Gretna, Nebraska. Let's talk inventory in Douglas and Sarpy County. Currently, we have 2,128 homes on the active market in Douglas and Sarpy County. That's up 24.7% compared to 2023. What about new versus existing? We currently have 1,005 new homes on the market. That's up 18.4% compared to 2023. For existing, we have 1,122 homes on the market. That's up 30.9% compared to 2023. As time goes by, more existing sellers are willing to give up that 3% interest rate because life happens. If we look at inventory over the past 10 years, we see the current inventory is comparable to pre-pandemic levels. When we had pre-pandemic inventory back in 2019, that was still considered a low inventory market. This is a chart of sales going back 5 years. Now, because of unaffordability, we have fewer sales. The number of homes sold back in 2019 during the month of September was 1,034 versus last month we only had 744 closed sales. This makes the market appear slower than it really should be. Now, we're a long ways from the peak selling years of 2020 and 2021 when we had over 1,200 closed sales during the month of September. More inventory is good for buyers. If you're a seller, you have to come to the realization that this is not the market of 2021. Now, there will always be a real estate market. The number of sales has dropped, and we're in an affordability crisis where buyers are simply priced out of the market. There are many buyers on the sidelines who simply can't afford to buy. But that doesn't mean a market isn't out there, because life happens. People pass away, people get married, get divorced, and people have kids. All of these life events create a real estate market. Plus, we have people relocating to the Omaha area. Speaking of relocation, if you need assistance with buying, selling, or investing in real estate, my contact information is in the description below. Let's talk about selling your home. You have to price your home competitively. The biggest mistake a seller can make is to overprice the property. An overpriced property stands out like a sore thumb. There's only one reason why a home doesn't sell, and that's the price. But you might ask, well, what about the location, or what about the condition? You can price your home to the condition, and you can price your home to the location. What about marketing? No amount of marketing can sell an overpriced home. 90% of marketing is the price. A lot of sellers, say, well, couldn't I just price it a little higher and then come down later? One of the first thing a buyer asks is, how long has this home been on the market? The longer a home is on the market, the less likely you'll receive a full price offer. When the home is on the market for a long period of time, buyers start to wonder what's wrong with the property. Homes sell for market value. 3 years ago, when mortgage interest rates were under 3% and sellers received multiple offers and the home sold for $40,000 over list price, well, guess what? That was market value at the time. Speaking of value, where are home prices? The median closed sales price for last month in Douglas and Sarpy County was $323,500, which is up 4.4% compared to September of 2023. If we compare new versus existing, the median closed sales price for a new construction property was $431,367, which is up 5.4% compared to 2023. For existing homes, the median closed sales price in Douglas and Sarpy County was $310,000, which is up 8.2% compared to 2023. If we look at the chart for home prices over the past 5 years, we see month-to-month variation, we see seasonality, and we see the overall direction of home prices in Douglas and Sarpy County. What about days on market? The average days on market in the month of September was 20 days on the market. That's up 25% compared to September of 2023. Let's look at months of supply. Currently, we have 2.5 months of inventory. That means if no other homes came on the market, it would take 2.5 months to exhaust the current inventory. If we look at new construction and existing, we have 6.9 months of supply for new homes, and we have 1.6 months of inventory for existing homes. The 6.9 months of inventory for new construction is a little deceptive because that includes some homes that are just at foundation stage or at frame stage. It's not 6.9 months of new construction that is complete and move-in ready. Just as a reminder, 0 to 3 months of inventory is a seller's market, 4 to 6 months of inventory is a neutral market, and over 6 months of inventory is a buyer's market. Let's look at percent of list price. For both new and existing, homes right now are selling for 100% of list price. Let's look at price per square foot for both new and existing. The green line represents new construction. The red line represents existing. We're going to use a 12-month rolling average to smooth out seasonality. For new construction, we're looking at $257 a square foot. For existing, we're looking at $208 a square foot. Let's talk about mortgage interest rates. According to Mortgage News Daily, the current 30-year fixed rate mortgage is currently at 6.53%, which is slightly up from a few weeks back. This is important. Last month, Jerome Powell and the Federal Reserve lowered the Fed funds rate. Now, this is good. The Fed funds rate is the rate at which banks charge each other and is not the rate on your mortgage. Mortgage interest rates are tied to the 10-year Treasury yield. Mortgage interest rates are tied to the bond market. Last week, the jobs report came back better than expected. The good news on the jobs meant higher mortgage interest rates. So mortgage interest rates actually went up a tad last week. Now here's the thing, I'm sure politics is all part of this. The party in power wants things to look as good as possible when people hit the voting booth. Where are the inflation numbers? The August inflation numbers came in at 2.5%, which is the lowest inflation rate since February of 2021. Again, I'm a little skeptical when these numbers just seem to drop just in time for the election.